This blockbuster GDP number, and that's the breaking news right now, 8.1%. The GDP growth is being reported at 8.2%, and this is versus the 7.8% that was reported in the first quarter of this financial year. So it is a blockbuster number. There is no doubt about it. The RBI was projecting it to be around the 7% mark, but now look at this number, 8.2%. We have experts joining us. Economist Gaurav Sengupta is with us, Chief Economist at IDFC First Bank, and Kanika Pasricha is the economist at Union Bank of India. Good to have you both with us. Just to be able to understand, Gaurav, from your perspective, and we're looking for more color to come in on 8.2%, that big number. But this is beating most estimates, isn't it?
I think this is beating all estimates, not most estimate. We were at 7.3. I think this is second consecutive quarter where we've had a massive pickup in GDP. Sorry about that. We've had a massive pickup in GDP, which has been higher than consensus estimates. When looking at the breakdown from the GVA perspective, manufacturing clearly much higher than expected. Services, again, a very good number, another 9% plus number. We had expected some moderation in services because government expenditure had slowed, but it has, again, better than our expectation. Basically, this print easily means that your full year GDP will be 7% plus, 7.5% plus, even without a trade deal. If we get a trade deal, then the full year annual GDP is likely to be higher. So very comfortable position from RBI perspective, especially on the growth front.
From your perspective, Kanika, looking at this kind of number, 8.2%, what do you subscribe this kind of number to? Because where the expectations are and where the number has come in, yes, government capex, that has remained a crucial pillar in supporting the Indian economy. Now the effectiveness in the crowding in of private investment. Tell us what you think are the biggest drivers right now, because despite the kind of tariffs that the Americans have put on us, we are still seeing an 8.2% number.
So, thanks a lot for having me on the show, and I completely agree with what Gaurav also said. See, frankly, when it comes to the impact of US tariffs on our GDP growth numbers, we think that because of front loading of exports this year, we've not seen too much impact of tariffs. In fact, even in the current quarter, GST-led consumption boost is helping out. But there are, a couple of indicators that I would want to wait for and watch out for. And that's most importantly nominal GDP growth. Where did the number actually settle? Because on a real basis, the deflator was playing a role in statistically boosting the real growth numbers. And that's been the case in first quarter. It's the case in the second quarter as well, when WPI was in the negative zone and CPI also was a subdued 1.7%. So important to see where nominal GDP growth has settled. That said, completely agree, 8.2% is a very good number to go with. It just shows that underlying momentum is more than expectations, because even RBI for this number was closer to 7%. So good number. Of course, trade deal, deferred trade deal impact not seen because of front loading of exports. Third, while statistical effects have played a role, it shows that the underlying momentum across key segments was positive, and including that led by government capex spend as well. Thanks.
So that point that you made about nominal GDP growth, I just want Gaurav to weigh in on that as well, because yes, nominal GDP has moderated. There has been softer inflation. So from a fiscal standpoint, Gaurav, how do you think that changes the revenue outlook for the government and the kind of future spending we can expect to?
Would you have the Q2 nominal GDP? I think with this sort of a print, even with a slower deflator, it would have been higher.
Right. No, we're waiting for that number. I haven't got it with me right now, and I'll ask our producers to pull it out. But in general, when you see the kind of role that nominal GDP is playing, how exactly do you think this is likely to pan out now, going ahead from here?
So from a nominal GDP perspective, the fact that the real growth rate right now is 8.2, even we had a deflator estimate of around 0.6 for the quarter. So it slowed down even more from Q1. Going ahead in Q3, the deflator will actually turn negative because your WPI inflation has gone into deflation. So that basically means in Q3, your nominal GDP was most likely to undershoot your real GDP. For the year as a whole, we are tracking close to 8% with this sort of real growth rate. Even though there is a slowdown in the deflator growth, I think nominal GDP growth will be closer to 8%, which is in line with what the central government budget had penciled in on FY25 actuals. The constraint that you are seeing at the center level is the fact that the income tax targets, they were ambitious to begin with because we got a very large, generous tax cut under the new income tax. And over and above, now we are beginning to see the impact of GST cuts. GST cut is more of an issue for the states. They tend to have 70% of the burden compared to the center. But we did see the October GST collection numbers, which is just a start, which slowed down to around 4% growth. So there will be a challenge, but from a fiscal perspective, we don't expect the center to slip. They will meet the 4.4 target.
So the number on nominal GDP has come in at 8.7%, Gaura.
That's slightly better than last quarter, if I remember correctly.
Yes.
So because the real outperformed, so it has countered the slowdown in the deflator for now.
Correct.
For the full year, we'll be comfortably in line with the union budget, which was around 8%.
Correct.
But we will have a challenge. For example, in our estimate, a net tax collection for the center will be lower than target levels by around 1.5 trillion.
Yes.
But center has a lot of levers. For example, they've got RBI dividend. We've got non-tax revenues that are doing better. Center is also saving money on the revenue side thanks to the just-in-time cash management. So overall, the center will meet the 4.4. We do expect states to slip. For example, our state fiscal deficit is tracking at 3.5% for the year versus 3.2% of GSDP last year.
Fair enough. Let's get further perspective on this, Gaura and Kanika. I request you to stay with us because let's just walk through all the numbers that are coming through, and we have clarity on the fiscal deficit as well. And I understand we've reached about 52.6% of the target for the current financial year. But Shrimi will tell us more about that as well, including all the highlights coming through from the GDP numbers. Shrimi, you're with us. Tell us exactly how it's panned out for the second quarter, because the headline number is stellar. 8.2% is far beyond the estimates that most economists had penciled in.
Well, absolutely. In fact, if you see RBI projection also for second quarter was at 7%, and it's definitely exceeded the estimation of, all sort of projection which has been made by economists as well. And in fact, to just give in perspective on that, 8.1% is what the Q2 GDP number, and if you see the nominal numbers as well, which is before adjusting the inflation, is also coming, quite better from the previous quarter, which also somewhere indicating that the economic expansion has really been take off during July to September quarter, and that is also somewhere reflecting in the public capex. The number of investment came in from the public capex side. However, private capex has to still sort of match the pace, but public capex, if you see the number, definitely it has added to this Q2 GDP resilient number. And in fact, if you see the monthly economic data as well, the rural demand, the way it has come, however, the GST rate cut has actually implemented from September 22nd, and the effect of that perhaps could be seen in the third quarter of this fiscal. But from July to September, there were, sentiments after Prime Minister has announced the GST, rate rationalization coming in on 15th August, and After that, in September, the cut has been implemented. So clearly a sentiment has been given. And if you see the corporate earning as well, that has also played a huge role in Q2 number for sure. As far as fiscal deficit is concerned, I would say that last quarter, if you see, it has around 36 percent, which is of course the widening of deficit, and that's why if you see there were a lot of chatter around that government this time should more focus on fiscal prudence, more focus on growth-led budget, and the way fiscal deficit numbers are coming in, which is around 56%, it's also give a clear hint that you see a lot of measure would come balance this fiscal deficit, because government is quite confident of meeting the 4.4% of target which is there for this financial year. So clearly we will see some measure coming in which will show more of a growth-led budget, growth-led trajectory for this fiscal and the next fiscal as well.
Growth-led would be a good estimate to make. Kanika, when you are looking at these numbers, and perhaps Shrimi, I can ask you to stay on and participate in this discussion that I'm having with our economists joining us on this very important piece of news where you're seeing GDP at 8.2% for the second quarter. Kanika, from your entire understanding of this, where manufacturing and mining, they've shown some mixed signals in recent months, but I was just looking at the kind of numbers coming through on manufacturing and construction. They look quite promising. So in that sense, how do you think the sectoral trends are shaping up to kind of tell us about the underlying strength in the kind of numbers that we are seeing on the GDP front this time?
So, first of all, it looks like where did we see the maximum surprise compared to our numbers, which was around 7.5% for the quarter. See, manufacturing last time also was very strong, around 7.7, 7.9, but it's around 7.7. It's actually printed 9.1 this time. Yes, corporate earnings were robust, but in our view, they were elevated at similar levels. They were elevated, but at similar levels compared to previous quarter, which shown a big jump up from 7.7 to 9.1, a very positive number. So that's playing a role. Maybe probably some role of deflator here, because corporate earnings were relatively flat, but it's a very strong number. Second number that's caught us by surprise is financing and real estate. See, what happened is that it's actually exceeded the 10% threshold. Very interesting. We thought the number will stay robust, close to 7.5%, 8% levels. It's again exceeded 9.5% as well. Now, very strong number. It looks like while banking sector had seen some uptick in credit growth, it's the real estate sector boom that's showing up much more here. Last but not the least, because Srini, was talking about the fiscal numbers. Last year, first half was an election, because it's an election year. First half, RevX was growing at a fast pace. So this year, first half, RevX has shown a contraction YOY, especially when you adjust for interest payments and subsidies. Despite this, public admin growth is at a 9% threshold, higher from last time. It's showing not just government spending, but other services in the economy, which are partly led by consumption, are booming. That's a big positive. It shows even before GST rate cuts, we had seen consumption momentum sustain in the economy, in fact, show an uptick in this quarter. Partly, in my view, this number is led by deflator as well, which was even more subdued in this quarter. But overall, these are good numbers, and they promise a higher nominal GDP, higher than expected nominal GDP for this quarter at 8.7, higher than even last quarter. So good numbers.
Yeah, so Kanika, Shrimi here, hi. Just wanted to understand that as we know that the India and US deal has been going on, the talks has been going on for quite some time. And in fact, we have not seen any impact on the first quarter. It was robust enough. And now the second quarter, where there were a lot of confusion around it. However, the deal hasn't finalized yet. How do you assess the third quarter? And do you see that government is also in a wait and watch mode in terms of coming up with any measure, around tariff, and do you expect any impact in the third quarter number of GDP?
So, Srini, thanks for the question, because see, what's important to understand is that the government, and not just the government, the RBI as well, in the last few weeks, the kind of stimulus that we got, the export promotion measures, 25,000 crores, then another round of credit guarantee scheme, 20,000 crores, then RBI came with a whole host of measures, including credit restructuring, specifically aimed at US-India trade deal delayed segments. It will affect MSMEs, specifically textiles, gems and jewelry, etc. So both RBI and government, cognizant of the delay in finalization of the deal, have tried to support these subsegments. Now, in terms of impact on GDP growth, we may see some impact in the second half. And that's likely because once the front loading of exports has started to subside, we have seen the share for US in our overall goods exports come down from around 24-25% to around 21-22% as per latest numbers for September. We think some impact will be there, but the compliments are to government to have rightfully provided with that GST booster in this quarter. It will